So what we do as accountants is we play with these three to work out what the best scenario is for you. And things that I see directors and business owners make mistakes on is that they don't actually legally put in wages properly. So they just take money out of the company thinking it's wages. But when it comes to wages, you actually need to deal with superannuation. You need to deal with wages tax, which is also called PAYG. They need to register for the taxes. They don't do payslips, and all those things are actually required for you to show that there are wages. Wages is like the old school way of doing things. Every entity or every stakeholder, like banks, insurance companies, even the government, if they don't see wages, they automatically assume that this business doesn't have employees, even though the director or the owners work within the business. Because our society is still a bit old school, wages is actually important. We need to show some sort of wages for the stakeholders, the ATO, the government, banks, and when you're trying to go for loans. One big one is insurance. If you're trying to apply for insurance and you hurt yourself at work, because you're an owner of the company and you're working within the company, you can also get workers' compensation. I've actually hurt myself doing accounting once. I was lifting files and I cut my fingers, and surprisingly, it cut my tendons. It was covered by workers' comp. Luckily, I did it during the time when I was working for someone. But if I was working for myself, if I didn't have wages, it's hard to prove what was my remuneration in terms of like insurance claims because I didn't have any wages shown. So that's why I recommend putting yourself on wages. If you don't have wages and you just work off like dividends and loans from the company, it creates a problem where people actually don't think that you're making any money at all, and they won't be able to pay you insurance payouts or like grants. It's always a good idea to have wages.